Good morning, traders. It is Monday, January the 6th. It's been a while since I've posted a video. I'm back home after the holidays. Hopefully, everyone had a good holidays and New Year's and ready to kick off an exciting year for trading and investing. I think there's going to be some huge trend changes this year, and we'll follow suit and follow those trends. And it's going to be pretty exciting times. Now, let's take a look over at the equities market. Obviously, we've had some volatility over the last few sessions with missile strikes and as soon as missiles start flying, we tend to see energies like oil, and we see precious metals, gold and silver, really start to take off going forward. And it's starting to put a little bit of some pressure on the equities markets. Obviously, we've seen the equities markets start to chop around here the last few sessions. We're seeing some broadening formation in the price action, meaning we're seeing higher highs and lower lows. Broadening formations are usually the sign of weakness, and we could start to see the market correct in a bigger way. And the question is, how far will it go? Or is it going to stabilize? Because this is still more or less news. Is the market going to digest it, hold its ground, and then continue to move higher? Now at this point, we are along the SP 500. We got long down over here, and we've pulled some money off, and now we're just letting it mature and see how things go. Now overall, excuse me, we're seeing money flow into the risk-off assets. We're seeing utilities start to outperform the SP 500, and we're seeing gold and bonds. All those things are starting to kind of perk up and do really well. So we're seeing that flow of big money moving into the safe havens and out of equities, and we could be on the last legs here this week, where the equities market could start to pull back in a bigger way. Now, if we take a look over at the chart of bonds, you can see bonds here have been consolidating since August. Huge. What this is a big bull flag. We've seen this market rally up. It had a bull flag, rallied up, more or less grinding its way up. But overall, it's had a big run up in this big multi-month consolidation. The bigger consolidation, the bigger the potential breakout. And if we look at the price action here and draw a line just connecting these highs, you can see more or less the market is testing these highs, depending where you want to draw these lines. More or less, the market is threatening to break out above these trend lines here. Bonds are trading up this morning a little bit. Overall, we still have the first pivot high here. This would be the second kind of standout and kind of more significant standout high over here. Overall, as we start to break these levels, the momentum will have shift to the upside, and we could start to see bonds really pick up speed as a safe haven play if the equities market starts to fall apart. And of course, this is a huge bull flag, meaning there's potential for a very big run out of this. Minimum would be somewhere up here to these recent highs, but again, the big picture of this is much higher going forward, up into the 70s and beyond going forward. So that's where we are in terms of bonds and where the money is flowing with the risk. Now, if we take a look over at, let's take a quick look at the VIX here. You can see here the VIX over the last few sessions chopping around, but overall it's holding up and showing continued up about 12% this morning. So when there's fear in the market, money rotates into the safe havens. And of course, missiles flying is usually when we see gold really start to rocket higher. And you can see here this news, gold moving up. It was up about $35 in overnight trading. It's pulled back a little bit. Overall, if we look at the picture of gold, it's very similar to bonds, obviously a little more sensitive. So it's really taken off and left bonds behind. But they have the same type of pattern. And I would expect bonds to start to do the same thing when the stock market starts to roll over. But gold's being as a safe haven and a typical place for money to roll over to once there's potential, obviously, missiles and things like that going on, war talk. Now, if we take a look over at miners, take a look at the GDXJ. We are into, just move back a bit here. We've seen the gold really move up, and we haven't seen miners fully break out and follow suit. In fact, gold had a big up day on Friday, and we saw gold miners open higher but sell back down. And that's because we're into this really significant resistance zone. Lots of buyers selling, shorting the plays here. But gold is bucking the trend. It is up on news. It's in rally mode as a safe haven play. And if it can hold its ground, gold that is, we're going to start eventually see all the shorts have to cover, and we're going to start to see a big move up in miners. And where we are right here is very similar to this type of price action here, where we're testing a previous high. It's rallied up, and then there's profit taking, people shorting it near these highs, holding it down. But eventually, if it starts to break out, which we could start to see today or this week, if it starts to run, everyone's going to have to cover their shorts, and we're going to get a big short squeeze, and it could start another push higher to the upside into the 44, 45, $46 per share on the GDXJ, which we are long and looking for a follow-through breakout going forward. Now, if we take a look over at silver, up 1.7% this morning. It's obviously similar type of price action, a big bull flag starting to break out. It has broken this first pivot high right here. It has now broken, as of today, the second pivot high right here. So it is in full out rally mode. We are long gold miners. I don't like to pile up in all one position. Gold miners is the same as holding a silver position. Silver miners or gold itself, they pretty much move together. Some will lead others. Right now, gold is leading the way higher with silver as the physical kind of global safe haven. But I think we'll see the miners follow suit and see a big short squeeze pop in the next couple sessions. Now, if we take a look over at energies real quick, natural gas up 1.7%. Let's just zoom in here. Overall, natural gas, we've been talking about it putting in a bottom, and it has yet to reverse its trend. This is why we like to wait for trend reversals to happen. Overall, we saw a trend reversal over here, a bottoming formation there. We're looking for some type of bottoming formation in here. Now, this is starting to get a little long in the teeth. In fact, it's starting to run down. We've got this 3 surges to a low where we've had a sharp sell-off, a bounce, another sharp sell-off, a bounce. Now it's just grinding lower with a never-ending fade of more or less selling pressure, and that's a good sign. This is usually the sign that a bottom is coming into play, and we're looking for it to break the 20-day moving average, just like we've seen over here where it starts to break the 20-day going forward. And once it can start to break this 20-day, we might be starting to be in the late stages of this basing formation. We could start to see a rally going forward. Until then, it is still in a downtrend, and we're going to let it continue to do its thing. I do have a couple key support levels down here that if we get a very strong drop into a long-term, this is not only a previous low, but a Fibonacci downside target. If price was to tag this level, depending on how the market drops to that level, we could stick a toe in the water, because I think it'll be a knee-jerk reaction rally back up to the 20-day, and then from there it could start to break out. So we'll see how it goes, but it has to hit a very significant long-term support level, a Fibonacci measured move. So it could be from the high to the low to the high, and that would give us the downside target. And more or less, we need a lot of things to come together for us to go for an oversold bounce off a long-term support. And simply because it'll be oversold, and at that level, I think we get a knee-jerk reaction back up. But you really got to wait for these key levels to come into play. This type of play here where the market gapped down and came down into this level, this was a Fibonacci target as well. You can see how it had a really strong bounce up from there, and that's what this type of play would be as well. It'd be at least, I think, a strong bounce, and I think we're at this later stages where it's about to carve out the final stages of a bottoming formation as well. Looking over at crude, up 1%. Obviously, talk about overseas issues going on. We tend to see energies take off, or at least crude oil, really taking off last week, and again this morning. It was up to almost $65 per barrel. It's pulled back from there. It's obviously testing the highs. The last time we had news with missiles, we saw it gap right up into this area. Of course, we're back up to that area on the same type of price action. We'll see how things unfold, but overall commodities are starting to perform really well. And my only issue is, obviously, these moves on gold and oil are based on news, and if things escalate, they're going to continue to go higher, but news tends to fizzle out. So we'll see how things shake out over a little while, over the next week or so. But overall, I wouldn't be surprised if we see price consolidate. We've had the pop on news, see it consolidate, and hopefully it'll hold a bullish formation versus just give back those gains and do a reversal bar, something similar to like this. We don't want to see the bottom just fall out and then consolidate with a bear flag and continue its move down. We want to see it hold its ground up here for gold and oil, and then we could potentially see it continue to break and run higher. Anyways, that's it for this morning, and I'll talk to you in a little bit.